Good afternoon and welcome everyone to today's webinar, and that we will be focusing on fintech regulatory resilience. Once again, my name is Richard Emar and I'm Business Development Manager at Sumsub. And today's webinar is brought to you by, of course, Sumsub, together with our partner, the FinTech Association of Hong Kong. So we're very happy to have you here, and please sit tight and let's move forward as we dive deeper into some of the challenges and how to build robust compliance frameworks within the fintech and crypto sectors, right? Right, let's move on to some of the housekeeping rules. So this webinar will take approximately 60 minutes, and you will all be muted in order to not to cause any noise. So please bear with us with that. And the slides and presentations will be shared with you via email, so make sure you provide the right and correct email address. And last but not least, ask as many questions as possible in the chat, and we will dive into it at the end of their session, which is basically the Q&A session. Right, and let's move forward to introducing our speakers. We have an amazing panel today. So I will be starting with this first speaker, and he is an asset recovery specialist with 20 years of experience in Asia. He is the CEO of Current Consulting Group and leads the firm's work with fintech, processing, and crypto. Please help me welcome one and only Bjorn Wallström to the stage. And second speakers on our panel today is the one and only with over 20 years of experience in the financial services industry. He spent a significant part of his career with a global fund management company working across finance, risk management, and governance in different countries, and ultimately as regional head of operational risks for APAC. Please welcome Vijay to the stage. Vijay, very happy to have you. Thank you for joining us as well. Third speaker on our list today, on our table today, our panel table today, is our one and only Deputy Head of Legal at Sumsub for nearly 5 years. She is a CISEC certified AML compliance officer and an experienced lawyer focusing on AML, KYC, data protection, and privacy rights. Lisa, welcome to the webinar today. Very happy to have you as well. Last but not least, he is part of the founding team at Legal Science and currently leads product strategy, a qualified lawyer in Singapore. He had previously worked in the capital market industry, where he actively advised organizations for listings and corporate actions. Ian, very happy to have you with us as well. Thank you very much for being part of this amazing event today. So we shall move forward to the next thing, which is the agenda of today's webinar. So basically, we understand that the regulatory atmosphere globally, not only in the APAC region, is quite ever-changing, challenging. So we will be diving deeper into the intricate world of regulatory challenges in Hong Kong and the rest of Asia. We will be discovering the practical strategies to establishing unwavering compliance structures, ensure your KYC practices align with latest regulations, which of course include travel rules, a new thing. A lot of companies are still struggling to understand how to mitigate and move around the travel rule new law right now. And last but not least, we have challenges obviously facing travel rule adoption, which is again quite an interesting topic because it is new and a lot of companies are still trying to figure out how to deal with them. Having said that, I would like to welcome our first speaker to the stage to look into, dive deeper into the intricate world of regulatory challenges in Hong Kong and the rest of Asia. Mr. Bjorn, the stage is yours. Thank you very much.
Rishi, thank you. It's a pleasure to be here. Thanks, Sumsub. Thank you to the FinTech Association. I think we can go straight to the first slide here. Now, trying to address topics like resilience and regulation. it really makes my life easier when I have something like the JPEX scandal right in front of me here in our backyard in Hong Kong. It really visualizes a lot of the different issues that we want to be talking about today. And it visualizes a lot of the issues that the industry has. I mean, JPEX, for all the listeners who are here in Hong Kong, JPEX has been visible in the streets now for the last few years, and not just a little bit, but they've plastered the MTRs with their ads. I used to see their ad on the tram every morning when I'd walk to work. I have to cross the tram line, and the tram would go by absolutely covered in JPEX ads. I mean, those of you who have been in the crypto space long enough, over the years, a kind of a benchmark for who to trust, who not to trust, becomes whoever is the loudest and whoever is the most visible is probably the one you want to be the most cautious about. And that really applies to the JPEX scandal. Now, as painful as that scandal is, in some ways, perhaps the fact that the scandal blew up right now is something that we should thank the new regulation for. It's going to be difficult for me to be too thankful to the SFC and to the Hong Kong government in how they've handled unregulated exchanges or fraudsters. It's a bit of a question there if JPEX is in the fraud bucket or in the fraudulent exchange bucket. But I'll consider some positive changes that the new regulation might have had in at least blowing up existing scandals like the JPEX. Now, taking a step back, the Hong Kong government finally came out with new regulation early this year. The fact is that was long overdue. I mean, it's something that us in the crypto space and the fintech space have been waiting for years. For years before then, even before COVID, there was little to no movement in that direction. The appetite, for reasons that we might not go too deep into today, but the appetite just went down when the overall appetite from the China side for crypto declined. It also declined in Hong Kong. I view it as a very positive thing that the government then has now finally come down on the side of wanting to be a fintech hub and wanting to encourage crypto in the city. There's not going to be time today to go into the details of what the WASP regime is and what's inside of it, right? I'll stay very top level here. I can say this much. It leans on a traditional financial framework, and it leans on other regulatory frameworks that we've seen in places like Singapore, right? It has some key differences, but it is a mature and well thought through system. Overall, the market has been positive. There's been enthusiasm from almost all sides, certainly not from side of fraudsters, which is something that we should be happy about in this case. Overall, it's good, and it's good that it's finally here, right? One thing to keep in mind here is that it is still very new. So having a framework is a good thing, but it doesn't stand on its own. It's literally just it's without adding on the pieces of infrastructure, the different pieces of puzzle that you need for effective enforcement. The regulation itself will do very little, all right? And here's maybe where, I mean, it's still early days, but we can start maybe to see a few of the potential issues with the framework. And I say issues here in the sense of items that need to be ironed out. I'll go through a few of these. The very first one is it seems that the regulator forgot to call the banks and tell them you need to open up your, not just your hearts, but you need to open up your policies to allow crypto companies in. This was discovered literally in the first week of the new regulation, and obviously it's been known to everyone in the crypto industry for years. The reason banks are reluctant to bank crypto firms are because of restrictive regulation. So if you want to change this from side of the regulator, I mean, you need to be the one to call banks and tell them, look, we're taking a different approach and we want you guys on the train. This is to some extent symptomatic for how the rollout's been of the new regime. it's been perhaps a little bit too much inside just the government sandbox. The insurance industry is another one of those. If a requirement of the government, which it is in the framework, every company operating under the WASP need to have a certain portion of the funds, of client funds insured. Who's supposed to insure it? Where do you go today to find an insurance provider in Hong Kong willing to deal with that? It's a very difficult challenge, if even possible. Another area, I'll dive a little bit deeper into that in just 1 minute, is that the text itself, stringent as it is and cohesive as it is, might have not always thought through how easy it is to define specific terms and how easy it is to actually audit and actually check for compliance with regulation. Let's go to the next slide and have a look at a few examples of that. So the framework is comprehensive. It covers a lot of different areas. I'll look at two. All right. Number one is custody, and I've lifted out one single point here. You've got it on the screen. It deals with cryptographic devices, and it deals with key generation, distribution, storage, use, and destruction of signatories' access. Now, any single one of those terms in itself is difficult enough to define, both in terms of technology, in approach, and in human interaction with that technology. The definition of a device itself and how to check that the device fulfills what the regulator has in mind is an immense task. I mean, to sit down here and try to fulfill as an applicant to the WASP, to try and fulfill this one paragraph is weeks and months of work. And it just, to an extent, it just cannot be done outside without further communication with the government. And my suspicion, and many others that have looked at this, is it sets it sets the bar very high, but the authors of the WASP may not themselves have really considered how much depth is hidden in single sentences like these. Let's go to the next example, please. On the side of cybersecurity, there's a few examples that leans more towards the difficulties in auditing the system. Stress test is a known concept in the banking industry, and it's something that's been around for decades. Now, that just isn't the case with fintech and new technology within the crypto sphere. The simple truth here is when the SFC requests a regular stress test of the capacity of a virtual asset trading platform, the obvious question is, who's supposed to do that and against what standard? There are some tentative answers to that. There is competence in the world to handle those questions. But again, my point here is the authors of the WASP may have not entirely thought through the difficulties hidden in one single sentence such as that. Let's move on, please. Now, the last question I want to deal with here is fraud and whether or not the new regulation actually helps deal with fraud and combat crypto fraud. But this one's close to my heart. My firm deals with victims of fraud. We've been based here in Hong Kong since inception, and we've seen the rise over the last few years of not just crypto fraud, but traditional fraud, pure crypto fraud, and overlap between the two. I'll come back here briefly to JPEX. It's not entirely clear to anyone at this point if JPEX is even technically a crypto-related type of fraud, or if it's an investment type of fraud. Right? The difference being that crypto is attractive as a cloak for fraudsters to make themselves attractive for victims. Right? Now, I mean, just in raw numbers, it's important for us, it's important for the regulator, and it's important for everyone in the space to know where we are right now in Hong Kong. And we're in a situation where fraud has ramped up year after year in a very, very dramatic fashion. This is not a crypto issue, but crypto has flooded into that issue. In terms of crypto has become an overlay on traditional fraud and yet another additional type of fraud. Right. The numbers you see on the screen now are compared to the same period last year. These are data from first half of this year, and the numbers is comparison to last year. Just the number of deception cases, I'll just read that one and I'll leave the rest to you, is up more than 50%. That's nothing short of shocking if we stop 1 second and think about it. All right. Again, it's not just a crypto issue, but it's an issue that has everything to do with crypto right now, because crypto seeps into all different types of fraud. Let's go to my last slide here. The other last slide, please, the forward last slide. Thank you very much, sir. Now, to try and answer my own question, whether or not the new regulation will help combat fraud. The simple answer is yes. From a government point of view, having a regulatory framework will help combat fraud in as so far as it helps set rules for the market, for operators within the market. It helps create a framework for law enforcement and for the legal sphere to know how to act, to know when to act, and to know what to expect from other actors in the field. The elephant in the room here is that unlicensed exchanges and unlicensed operators is still the norm. I'm actually not judging that point here. I'm a big fan of decentralized technology, but it's just a matter of fact that unlicensed exchanges is still the norm. And that will probably be the case for a long time. To date, we have very few actual licensed exchanges in Hong Kong. To my knowledge, there's only 4 licenses under consideration right now. That number might have changed it's changing pretty quickly. Still, I say it's not a lot after having the framework for all these months. Another issue is the reluctance in police, and I want to try and be fair here to the Hong Kong police. Reluctance of dealing with crypto and the difficulties in dealing with crypto. Another issue is the willingness and capacity for government to take action against fraud in general. Everyone in the Hong Kong crowd here today will know how prevalent fraudulent phone calls are. It's become normal that my phone rings 5 to 8 to 10 times per day. And it's various types of frauds, hooks, attempts at entering into conversations that would obviously lead into a fraudulent approach. Unfortunately, that's become the normal, and there's no gentle way of saying this. Our government has failed us in that regard. There are ways of dealing with that. It's not the norm in other countries. It's certainly not the norm in places like Singapore. These are things that can be dealt with or without crypto. It does not have to be that way. And then when we talk about crypto and crypto regulation, there's some low-hanging fruit that I think the regulators should deal with as well. The very last issue here I'll leave you with, and I'm going to hand back to you, Rishi, is speed. It cannot take years to bring out a piece of regulation. It cannot take years to approve licenses, and it cannot take weeks and months to crack down on entities not complying with these licenses. Crypto is an extremely fast universe. And if you want to regulate it, and if you want to be enforcing that regulation, you've got to learn speed. This applies to investigators, to law enforcement, to the government. It applies to everyone who moves in the field. That hasn't been the case so far. It's just something that everyone who wants to be a player in crypto needs to keep in mind. You gotta keep pace with the technology, and it's not an easy challenge. Thank you, Rishi.
Thank you so much, Beyond, for amazing presentation. And honestly, I cannot but agree with the second point here on this slide, because I was last year I lost an asset, and I remember I went to the police and I said, hey man, can you guys help me figure it out? And they couldn't do anything. Like, they don't even understand what I was talking about. They don't even understand what crypto means. It was like a rocket science for them. So it's a pain, because this is a fast growing industry, and it's sad that government still cannot figure out a way of protecting normal users like ourselves. So thank you very much, Beyond, for once again staying within the time frame, and an amazing presentation once again. Let's move forward to the next speaker. So let's see. Okay, so we will be diving deep into the practical strategies to establish unwavering compliance structures. So with that being said, I am now welcoming VJ to the stage to please help us understand some of the best practices and strategies to stay compliant. Thank you.
Thank you, Richie. Can you move on to the first slide, please, if you don't mind? Yeah, I think leading on from what Beyond just presented, I think we're seeing sort of varying degree of maturity. I just wanted to talk for a couple of minutes about the regulatory challenges across Asia. And if you look at different regulations, I think you see a couple of markets which are way ahead of the rest, whereas others are catching up. And again, if you talk about the existing markets where you see regulations are a little ahead of the rest, they still have sort of issues like the one Beyond just pointed out, saying, oh, you meant this, how do we implement it? What does it mean when it comes to control? So if you are a compliance professional, you're looking at basically, I'm not saying that everything has to be prescriptive, but talking about saying, how do you deal with certain issues? How do you make sure that you're not caught saying that, yeah, this is what I meant, but this is what you're supposed to do. So as a compliance officer, for me, one of the key things, and when I talk to different compliance officers from where I was before, is to make sure that I understand what the regulatory expectations are. And this is not to say that it's easy for the regulators, because even regulators are basically on the learning curves, trying to understand what this entire thing means. What do I need to regulate? What do I need not regulate? So if you look at different markets, Hong Kong already Beyond touched upon. You look at basically Singapore. Singapore has come out with the Payment Service Act in 2020. They have moved ahead with it, focusing on MLTF, travel rule, and those requirements. But it's now going beyond that, and we are looking at additional requirements in terms of client asset segregation. Again, these are all challenges. The industry will have to grapple with what do you mean by client asset segregation? How do you do that? What is a good standard to comply with? And this is a problem that every compliance officer will face, because end of the day, when the regulator steps in and does an inspection, they need to be able to convince them, saying that what I'm doing is possibly the best in terms of what the regulatory expectations were. So those are things that you're seeing. Again, the large theme that we are seeing is retail investor protection, which is the theme that we are seeing globally across, saying that the regulators are trying to keep the retail sort of investors out of this because of the amount of risk associated with it. So there's a lot of talk about disclosures, what disclosures are required, and so on and so forth. So these are things that are coming up. So we're going through a sort of a series of regulatory sort of changes that are coming along, and it's ever challenging for a compliance officer. Needless to say, the internal challenges that they face with the business from a technical competency point of view. So those are things that we are seeing. There are additional prudential requirements that are coming in addition to just the MLTF. So you're seeing things like minimum capital requirements, trying to say that how do you safeguard things and stuff like that. We can move on to the next slide, because that's the focus which I wanted to just talk about in terms of what are the components for being. So, let me make it very clear. It's not very different from what you would have done if you're a compliance officer in a TradeFi sort of space. So the compliance officers sort of the sort of framework doesn't change significantly. What I mean by that is, as a compliance officer or a compliance personnel, you need to know what are your goals, what are the risks that you're actually trying to achieve. and where are you trying to get. So that's an important component. So if you have a compliance officer and you are a compliance officer, you need to know what is the risk that you're trying to work on, and how do you enable the business to achieve what it wants to achieve while staying within the framework. So that's the basic premise with which you start off. Then comes basically the second challenge, and this is largely a challenge in fintechs, and this comes from my experience working in a couple of fintechs, is align and have a compliance culture within the organization which aligns to all the regulatory requirements. Because you can't have a compliance officer talking about things that is required, whereas the business is running in a different direction. So the alignment and making sure that when products are being built, when things are being put in place, the compliance involvement is there, and they become a partner in growth rather than looking at saying that compliance is just to tick the box and fulfill certain regulatory obligations. So that becomes an important component, which a lot of compliance officers struggle because of the speed at which technology is changing and how products are getting launched. Then comes in saying, how do you establish a sort of a functional scope? So how do you define what your team needs to do? How do you address individual components of the regulatory obligations? And this doesn't stop at just MLTF and the travel rule, which is part of the MLTF requirement. So how do you look at overall thing? Do you have a compliance program that can again manage the entire risk that comes through the regulatory obligations that you have? Is something that needs to be looked at. The fourth most important thing is, are you up to speed with what the changes are? Do you understand what are the regulatory changes, what they mean? How do you basically then communicate these things within the organization? Do people within the organization, whether it's the senior management, whether it's a board, whether it's your sort of product guys, do they understand what they need to do with as a result of the change in regulations? So that becomes another important aspect. Then comes in saying that, of course, once you do all these things, then you need to align your policies, procedures, controls, whether it's your KYC solution, whether it's your sort of travel rule solution, to say that how do I comply with this regulation? So you need to have policies and procedures which clearly can demonstrate saying that this is how I'm complying with what's come out of the regulations. Training your employees, which is again fundamental, because a compliance guy can't be everywhere. So you got to train guys in the business to understand that, because every guy in the business, if they don't think compliance first, then obviously there's going to be a gap in what you do. The next one is basically saying, how do you keep record of things? Because most of the jurisdictions will need you to demonstrate that you have done things, even if they come back and look at something 4 years, 5 years down the line. Then you have to look at continuous improvement within your existing processes, and most importantly, have a proper senior management and board oversight in terms of what you do as a business. So these are, I think, I mean, this is not new, but I mean, I think what happens is with the change in technology, with the way in which you do things, it's significantly different from what you do within a TradeFi sort of space. And again, to the point that Bjorn just alluded, I mean, crypto or even generally fintech at large, whether you talk about payments, the speed is critical, because if you think that you can work at a speed that you have been working in the past, sorry, it won't work. And that also means that as compliance officers, you need to be more technologically savvy. You need to understand what new technologies are coming in, and also not just buy those solutions, but know how to implement them. So just move on to the next slide, Richie, if you can. So I just want to dwell for a minute or two on basically what are the current challenges that I see within the compliance sphere, because the structure, the sort of the best practices, we know what we need to do. Rapidly changing technology is a challenge, and I can give you a good example around that. Now we talk about, say, on-chain monitoring. I mean, I think there are enough tools available in the market, but when the tool is something that you can buy, I mean, you pay a few dollars, you can buy the tool from the market. How good is your compliance officer in terms of understanding how to use the tool, how to use the tool to fulfill the regulatory obligations? Do you understand what it really means? Because what blockchain has brought about is access to more information, more transparency, which is great. But more information means you have to take more decisions. So where do you stop? There's a general saying, it's a risk-based approach that you need to take. What does the risk-based approach mean? Do you understand what's your risk appetite as an organization? I mean, I think these are questions which don't even get asked in most of the organizations. And that's where the challenge comes in, is saying that either you do too much or you do too little, and either of them is not good. So that's one of the things that I'm saying. The rapidly changing technology is one of the key issues that we see currently. The cross-border nature of operations, these things, crypto is definitely borderless. So you don't know whom you're interacting with, what's the risk that you're taking on, and that's definitely an issue that I'm seeing. Resource constraint, I mean, I think technology I just spoke about. People is an issue which I don't know too many people don't really understand when it comes to new regulations being put in place, the requirements around having a dedicated compliance officer who comes on board and takes on the responsibility. Now, if I have to take an example of a market, let's say Singapore. I mean, Singapore has been has the regulatory regime for some time, and one of the requirements, you need to have a compliance officer who is responsible. Now, two things. One is basically the knowledge, which I spoke about. Second is, where is the skill set? Where do you get these people from? And eventually you might go back and tap into the same resources in TradeFi, which is basically you pick up somebody who's been doing KYC and you bring him as the head of compliance for a crypto exchange. Do you really expect them to have the knowledge to basically run all the requirements that the regulator are asking for? And that I see as one of the biggest challenges, because in TradeFi, you would have a head of compliance, but most of the guys would be working on silos in where they're subject matter experts, and suddenly they come into a fintech or a crypto exchange or of the likes, and they suddenly figure out that this is a completely different ball game, and it's not good for the organization itself, for the individual, and also for the regulator, because there are people sitting in there, but they really don't understand what needs to be done. So these are challenges that I'm seeing, and I think these are real challenges. And you see the turnover in most of these places is very high because people are getting burnt out. So my thing is that you need to bridge this knowledge gap. And bridging the knowledge gap, I'm sure there are enough industry efforts happening more on the technology side, but on the compliance side, like sessions like this, where we talk about these things, and also through various other training sessions, I think that's where the gap needs to be bridged, and we need to have more people who understand this technology. Again, talking about law enforcement agencies, they also need to be trained in terms of how to deal with these things. So these are things that I see as obvious challenges, and people are still grappling with it. I mean, while you might, I mean, you are good as long as you're not held accountable, so that you can go on till such time that you're caught in the crossfire. So that's where it is. Again, regulatory changes is fast. How do you dwell with it? I mean, do people have a compliance program to even understand what all their obligations are? So that's, I see a lot of guys don't have compliance programs. I mean, which is basically seriously saying that you don't know what you need to do. Then it comes to saying compliance needs certain things, like we will talk about these things. I think the later speakers are talking about travel rules and the likes. But it also comes down to customer experiences. And then they say, I mean, how much do we need to do? Do we need to do all these things? That's the question that comes. Then the question on scalability. I mean, yeah, you're doing, say, you're onboarding 1,000 customers a day. How do you scale up your operations? Is your compliance officer geared enough to be able to identify solutions and implement them in the manner that it should be? And then it's basically, again, to the whole point that I mentioned, innovation versus regulation, right? I mean, what do you want to take to the market? What is the regulatory expectations? How do you map this and make sure that this works well? Yeah, we can move to the next slide, if you don't mind, Richie. Yeah, so I mean, I'm just as a introduction, I'm not an expert. I would not say I do understand what it's a requirement, but just to move into the next section, I mean, I think travel rule is extremely important. I mean, I think given the borderless nature of crypto, travel rule comes as a huge deterrent for very bad actors to make sure that there are some checks and balances to make sure that at least the money doesn't flow from this sort of platforms into the traditional markets and basically has an impact on the larger financial market. So I think it becomes extremely important to have travel rule implemented. There are enough challenges going around how to implement this. That's something that I have covered in my next slide. If you can just go to that so we can just quickly dwell upon it. I think there's definitely, the next speaker is talking about it a bit more. So when I look at travel rule and the requirements, I think the regulatory landscape is complex, not from a FTAHK point of view, but each individual jurisdiction, who's implemented, who's not implemented, how do you basically align what you are saying. Can you trust passing your customer information to somebody whom you don't know is on the other side? The quality of information that you receive, how much do you trust on that information? Again, data privacy concerns are there. Technical challenges are there, saying that there are multiple WASP. Are they all on the same platform? How do you get information from everybody concerned? Then again, it's about customer experiences, right? The market moves very fast. Now, if you say, I'm going to take 4 days to confirm everything, the market would have moved in a different direction. The customer would be yelling at your door and saying that what's going on, your platform is not good enough. Then comes the data accuracy, resource constraint in terms of how do you implement some of these things on an ongoing basis and scale it up. Again, training education, I think, is a fundamental issue across all these areas. And I don't think we have enough people out there in the market who understand what requires to be done and how best we should go ahead and implement these things. So these are some of the points. I just wanted to bring up what I've seen from the market, generally on the crypto side, also on the fintech at large. This is what we have been seeing there.
Vijay, thank you very much for that. I mean, quite insightful. Again, I cannot but agree with you, especially when it comes to education and training, because you know, some of these issues cost companies fortunes, and in terms of regulation fines. So I think you have a very, very good insightful material. So once again, thank you very much for that. We will move forward as we you know, running out of time. So just make sure that we cover everything that we have today. So on the next topic that we'll be covering today is how to align KYC practices with the latest regulation. And on these, we'll be inviting Lisa to please join us on the stage and discuss a little bit about this topic. Lisa, are you there?
Yeah, absolutely. Thank you, Richie. I'm very happy to be here. So probably adding to the insights from Jorn and Vijay, and speaking of APAC in general, here we have some crypto-related updates, both recent and possibly coming soon as well. And actually the trends indeed look very similar, although retail trading finally being legalized in Hong Kong, even with these strict licensing rules, it looks like a bit of an outlier. So it's curious whether the JPEX case will somehow reverse it. I mean, it certainly looks like all these crypto crackdowns, they tend to be more reactive rather than proactive. It's not like APAC regulators are hostile towards crypto as a concept, right? Judging by how the institutional investors and government projects are doing. But anything concerning retail, I guess, to the regulators is basically now inseparable from all these market explosions like Terra, FTAHK, and now we have a more local story like JPEX. And yeah, these cases, they all may have different roots. They're not the same, but at this point, the industry is considered suspicious by default, probably. And we've heard many times very high-ranking officials calling retail trading speculative. And of course, every new scandal prompts them to add more restrictions. So now we basically have this variety of measures, some of which may simply intend to bring crypto closer to more traditional financial and banking services, like, for instance, the requirement to store and manage the customer's assets separately, or to keep liquid reserves or insurance to compensate the customer if something goes wrong. But also we have more targeted things like the lending and staking ban, or obligatory risk disclosures, promotion rules, or let's say criteria which tokens may or may not be offered on the platform, etc. And this list can potentially grow even further if you consider the entire industry as high risk, right? At the same time, it's hard to say, hard to measure the impact it could have on the industry, because yes, as Bjorn mentioned, the legal framework itself, it's quite comprehensive, and there is a lot of interest in the licenses. So I guess in Hong Kong, eventually we'll have to see at the to see the actual approval rates once the transitional period is over. Because if it turns out the majority of applicants can get approval no matter what, as it happens in some other APAC countries, then you're a bit like perhaps university professor who just failed 90% of their class, like maybe the point was missed somewhere. So, and then, yeah, basically you risk ending up with 10 supervised companies that you can control maybe, but also 100 unlicensed companies, including those overseas that are totally beyond your reach, very much like the gambling industry, in fact, a very similar situation. So let's see how that turns out. And in the meantime, what we can do is just help everyone interested in compliance from the AML KYC standpoint to get prepared. So just moving to the next slide, in terms of probably the main struggling point for crypto companies right now, I guess the previous one, yeah, that's one. Yeah, so the travel rule is probably the hardest regulation for crypto companies to implement right now. And it's also one of the recent updates for both Hong Kong and Japan. Although I'd say for Hong Kong, it's probably more urgent because in Japan, it has already been obligatory for certain companies for some time. Of course, in Hong Kong, there is also this transitional grace period until January, I believe. But the only exemption is basically you can transfer the data as soon as you can to your counterparty instead of immediately with a transaction as normally required. So the good thing here probably is that the regulator does acknowledge that the sunrise issue is still fully there, and there is still no perfect technology to accommodate the travel rule, even 4 years after it became a thing, was introduced by FATF. But in any event, all the other requirements, they have been very much applicable since June. And the SFC does give high priority to the travel rule in general. I believe the concern is that any delay could make the local industry less competitive because VASPs from more regulated jurisdictions would not transact with them, so they would be driven away. So arguably this grace period doesn't really provide a lot of relief based on the feedback we got from the industry. And in fact, if we look at this enforcement timeline overall, the APAC countries, they have been among the pioneers, right? Among the first ones to adopt the travel rule in the first place. And their requirements also tend to be stricter and more detailed than in other countries, which in fact doesn't always serve to their advantage because the rest of the world doesn't necessarily follow up, as we can see from the right from the next slide. Okay. Yeah, so this trend is actually very prominent in the latest update we got from FATF. If we compare the findings for 2 years, the number of countries with any progress on travel rule, it hasn't increased a lot, even despite the vast difference in the number of respondents overall. And if we focus on the current state of things, even with the TFR in Europe, which is not represented on the graph because it was adopted later, it doesn't get much better since the TFR, it won't be in the picture, it won't be in effect for a long time. Now, the sunrise issue is, of course, a huge factor here because on the one hand, regulators hesitate to adopt the travel rule because they understand the local industry will struggle with cross-border transfers. But at the same time, the problem will simply not go away until the travel rule is more or less universally adopted, but also consistently applied because different enforcement timelines are one thing, but the scope of requirements that already exist across the world, they can also vary based on the country. So if one VASP is from a more strict jurisdiction than its counterparty, which can easily be true for APAC countries again, then we kind of have the same problem just on a smaller scale. And FATF does acknowledge that VASPs from more compliant jurisdictions, they are somehow disadvantaged. It's just that there is not much to do about it at this point. This issue can become, I guess, especially relevant for VASP due diligence, because if we take the SFC guidance, for example, what you have to do, you have to, first of all, identify if the transaction is going to a self-hosted wallet. If yes, then it's a separate problem. If no, then you have to identify the counterparty VASP, and good luck with that. And then once you have done that, you also need to check its eligibility, check whether you can actually trust it with your data based on a whole lot of parameters, like whether it's licensed, reputable, subject to travel rule, has adequate AML and data protection controls. So I'd say the bar is higher than in most other countries, and possibly in some instances even higher than the FATF basic default requirements. And so normally it's simply not possible to conduct real good quality VASP due diligence on your own. So the standard practice is then to join a network with pre-verified VASPs. But these networks, they don't all interact with each other, which means one network may simply not be enough. And then again, it becomes a question of costs. And besides the sunrise issue in VASP due diligence, there are also a lot of other factors that you have to consider. So on the next slide, we'll be able to see just as the minimal threshold, for everyone still facing this choice of the right travel rule solution. Here's basically a checklist of both markers of non-compliance from FATF, and in contrast, on the other hand, the must-haves from the SFC. You can see, of course, there are a lot of matching points here, actually, but one thing the SFC probably focuses a bit more is interoperability. I mean, FATF does encourage it as well, but since it's not in FATF recommendations, it's more concerned about its own requirements. So the issues FATF highlights, they are more or less procedural, like the case where the data is transferred after the transaction is executed. It's more or less obvious because yes, the recipient could access the funds before you have even screened them for sanctions. The same goes for scenarios where you don't collect the right information, like substituting the wallet address for transaction number, or where the steps for data exchange are messed up, or like when you fail to get the beneficiary data independently in the first place, or where perhaps eventually the data can be stored long enough, which could be 5 years or more, depending on your regulation. And then both lists also address the sunrise issue. Like, of course, the solution has to accommodate the fact that different jurisdictions may require different amounts of data, both regarding the counterparties, the transaction itself, the participants, but also within the same jurisdiction. This would also depend on the volume of the transaction or whether the transfer is cross-border or not. But the most problematic point is probably, again, the VASP due diligence, because realistically, with no centralized registry, with very little public information on VASPs, and unless you want to spend like 7 business days on every second transaction, eventually you have to rely on some third party or several for both VASP discovery and all the assessments beyond that. But this reliance, its extent cannot be absolute, right? And in fact, this is an issue that often gets overlooked because both FATF and the SFC, they mention that a VASP has to carry out its own evaluation of the counterparty. You cannot fully delegate this process to someone else. So one way to counter that, I'd say, is to ensure that whichever provider you choose, they make their due diligence procedures really transparent. So what it means, if you're in a network and you see a VASP with verified status, make sure you understand exactly what it means, what input data went there, how it was checked, which procedures were followed, whether you can request the same data and possibly replicate the same steps if you need to. Because I would say from our experience—
1 more minute, please. Yes, 1 more minute,
sure.
please.
Yeah, already almost over. I just wanted to touch on what Vijay mentioned in terms of how do you ensure that every member of the network provides all the information you need, because now practice is a major part of the product. With every VASP, it's certainly not a one-day process. There are always iterations to additional comments and documents that you collect. And in general, then companies may also refuse to provide their data. And so you have to decide what to do in case everyone wants to leave the ecosystem, what happens to the company data, because it's still needed for the records. Yeah, definitely make all of that part of your checklist if that's relevant for you. Other than that, I guess that's it from my side. I'll be happy to pass the floor to Ian for, I guess, more practical concerns regarding travel rule and its implementation as well.
Thank you very much, Lisa. And without wasting much time, let's move forward to Ian to cover some of the challenges facing the travel rule and how it could be adopted. Ian, please, the stage is yours. Thank you.
Thank you, Richie, and thank you, Sumsub, for inviting me to participate. Previous slide, please, actually. Can we, yeah. So my friends who went before me have nicely covered, I think, broadly speaking, what the travel rule is, and they've also covered, some of the challenges that companies face. So I'll try my best not to repeat the points that they've mentioned, but what I will like to do is, share some of the experiences that I've had in terms of working with our clients when it comes to implementing the travel rule. And I think it's very important for us to understand how the travel rule came about, because understanding, its origins helps us then understand why some of these challenges have emerged. So in the traditional Web2 space, when we think about how transactions are done between banks, I'm pretty sure most people on the call would be familiar with something called SWIFT, right? Where SWIFT acts as that intermediary communication layer that helps banks exchange information about who the senders and the receivers are in their respective organization. And the main reason for having this exchange of information is to help regulators track how funds are being moved, both domestically and in an international level, so as to combat money laundering. Now, one key thing to note is that in the traditional world, when it comes to doing e-money transactions, in 99% or even 100% of cases, it's always typically between a regulated entity and another regulated entity, right? So it's between one bank to another bank, or with a bank, payment company, or today, increasingly, you might have a FinTech on one end. But important thing to take note is it's always a business. It's always an entity at one end. Now, when regulators then sought to implement the same kind of requirement on the cryptocurrency and blockchain ecosystem, one of the things that they failed to take into account is the technological nuances, right? Specifically, the fact that in the cryptocurrency space, not all transactions necessitate one end being an organization. In fact, one of the key driving points behind people wanting to adopt cryptocurrency is the fact that individuals or organizations for the first time have the ability to control the wallet and the assets that they're transacting, and thereby allowing them to bypass the need to use an intermediary, an organization like a bank or a regulated entity, right? So that's the first thing that I want to point out. Now, when it comes to implementing the travel rule, then, because the requirement initially started out by requiring two VASP to exchange information about the sender and receiver, as you can imagine, there were numerous issues that emerged. Another challenge that the industry faced when travel rule was first introduced in 2019 was that there wasn't a lot of detail given to the industry as to how it was expected for them to put this new requirement in practice. Right. So again, drawing an analogy from the traditional space, in the traditional space, it was very easy. All the banks would simply subscribe to SWIFT, and they had an established communication channel to use. They had certain messaging standards which they could rely upon. But in the cryptocurrency space, none of this was actually made known to the industry when the requirement was introduced. And so what that led to was a proliferation of, companies who emerged, all of which tried to create what they thought would be the most effective way to solve this issue, right? And so what we saw happen in the space was, numerous companies emerged, all of which were building their own communication channel and leveraging on their own messaging standards. So to give you guys an example, what happens if one company decides to build on WhatsApp and another company decides to build on Telegram? As you can imagine, those are two separate platforms and which do not speak to one another, right? And if the travel rule was intended to facilitate the exchange of information between organizations, then as you can imagine, it only makes sense for those organizations to be on a similar communication layer so as to allow for that expedient exchange of information. But that wasn't made clear. On top of that, to make the issue worse, we also then had the sunrise issue, which a couple of my friends had talked about. But to give you guys some specific examples as to how the sunrise issue might be an issue. So number one, it could be something as simple as, one jurisdiction saying that travel rule is ineffective immediately, wanting to transact with a company in another jurisdiction where, let's say, travel rule is not yet implemented. So what happens in a situation like this when the sender is obliged to comply, but the receiver is not. Now, let's say even if we encountered a situation where both entities were in jurisdictions with applicable travel rule, that doesn't necessarily mean that these standards are the same, right? So what happens again if the sender is obliged to comply with travel rule for transactions above $500, whereas the receiver is only expected to comply for transactions above $1,000, right? What happens when we have a transaction now of 750, which sits nicely in between? You might have the sender saying that they require travel rule compliance, but the receiver, on the other hand, disagreeing because their local regulations do not require them to exchange this information in the absence of transactions above $1,000. So there were these kind of issues that also came into play. And then, of course, there were the privacy concerns, which again, a couple of my colleagues mentioned, right? The fact that, today, cryptocurrency is quite cross-border in nature. We do see many organizations transacting on a global scale, but the reality is, data protection is not yet equivalent in many different jurisdictions. And with the increase of data attacks that we see today, this is a growing concern amongst not just regulators, but industry participants as to, how comfortable are they sending information about their client to a counterparty, which they may not necessarily be very familiar with. And then the last issue that I just want to talk about briefly in the interest of time is, like I mentioned, in the traditional space, this requirement made a lot of sense because it was always a known entity, regulated entity on both sides. But in the cryptocurrency space, with the ability for users to transact with private wallets, it becomes a challenge sometimes for businesses themselves to identify, hey, is the recipient that I'm sending to an individual or an organization? And if it is an organization, how do I know which organization it is in the absence of some kind of VASP discovery? And so with that, I'm very happy to say that, through a partnership between Merkle Science and Sumsub, we've managed to combine blockchain monitoring, right, which seeks to provide risk assessment on cryptocurrency wallets with Sumsub's latest travel rule solution, where we basically serve as the VASP discovery layer in order to enhance Sumsub's travel rule solution, thereby allowing them to verify any submission by their clients through an independent third party as to whether or not the counterparty is a VASP that should require travel rule compliance. So with that, Richie, I know I do have a couple more slides, but I think in the interest of time, I'm just going to stop here and see, if there's any Q&A questions that we want to take, given the few minutes we have left. Yeah.
Yes, Jan, thank you very much for keeping it as comprehensive as possible. And yes, we are almost out of time, so we'll move to the next thing in line. So just go through this. So this is the Q&A session. I want to, first of all, thank you all speakers for an amazing presentation and insight. So our participants, if you have any questions, please go ahead and drop it in the chat. This is the chance for Q&A. So I think we have one question here. Who are retail in Hong Kong? Anyone want to take that question? Who are retail in Hong Kong? So not sure what that means, but maybe any one of us want to take it. Okay. So I'm not sure if you, okay, I don't have a question, but I do have to jump to another call. Okay, so no questions so far, and so let's move forward to the next thing, which is basically how you could contact us. So if you have any questions, want to talk to us about anything KYC, KYB, transaction monitoring, which includes travel rule, crypto travel rule monitoring, and all this good stuff, please feel free to get in touch with us using the address on the screen, info@sumsub.com, or you can get in touch with me directly. I'll be very happy to help you move forward. And also, you can also follow us on YouTube and of course on all the social media platforms that we are present in, and you will learn more about Sumsub and of course with all our partners. Please feel free to scan the QR code on the screen and let us know your thoughts on this event and what was helpful for you, what you would like to see more, and what wasn't quite helpful. Both positive and negative feedback are all welcome, so please let us know your thoughts. And last but not least, I want to especially thank all the speakers for an amazing presentation, amazing slides, amazing insights. Unfortunately, we are out of time. I had a couple of questions that I wanted to put out there, but they're based on the time factors. I will have to put that for the next time. Right. Having said that, thank you very much, guys. I think we have come to the end of today's webinar, organized by Sumsub together with the FinTech Association of Hong Kong. Thank you very much once again for the time, and look forward to see you next time.
Thank you.
Thank you, everyone.
Thank you.
Thanks a lot.
Thank you, guys. Yeah. Bye.